Now, for the review of the market, I'm being joined by an investment analyst at AfroInvest, Omotola Abimbola. Good morning, Omotola. Thank you very much for joining us.
Good morning, Chimeze.
Right. We saw the market close bullish last week. However, during the week, we noticed kind of a two-day negative trading. So how would you describe investor sentiment this past week?
I would say it has been quite positive. The profit taking we saw on Tuesday and Wednesday, they were followed by bargain hunting on Thursday and Friday, which drove the whole share index up to 1.5% gain week on week. And year-to-date return has increased to about 37% now. Like you also mentioned, the rally last week was broad-based. We saw gains across all sectors, right from the insurance index, which was driven by gains that we saw in Mansard. Mansard is an insurance company which also has a pension fund license. So I guess our thoughts is that due to the rally we have been seeing in the fixed income markets, investors' expectation of their Q3 as well as their full year earnings, they were quite positive, and we saw massive position taken in the stock. Also in the industrial goods segment, we saw a rally in Dangote Cement as well as CCNN. CCNN also gained about over 20%, which we attribute to also expectation of their 9 months earnings. For the oil and gas sector, the index also closed upward, driven by gains we saw in Total. So generally, if you look at what's been, if you look at the pattern of trading, looking at the fact that all sector indices were up, both the large caps and the small caps were also up, that tells you that investor sentiment is quite strong at the moment. And all these rather strong sentiments, we attribute it to expectation of the 9 months earnings for companies. Because if you analyze the fundamental of the economy, as well as leading macroeconomic indicators such as the PMI result that we've seen for third quarter, such as the stability in the foreign exchange markets, they all point to the fact that the prospects for economic growth, is much more brighter than we saw as of half year, and companies are meant to benefit from this, better growth prospects for the economy. So on the back of that, investors anticipate very, very strong earnings from companies. All
right. Now, it was a week of the World Bank IMF meeting. Correct. Also a week of the Nigerian Economic Summit that was in Abuja. Correct. And of course, that week, the IMF came up with a positive projection for Nigeria's growth. Now, could that have also driven sentiment towards the equities market, particularly from the portfolio investors?
Not necessarily, because what the IMF did was to retain Nigeria's 2017 and 2018 growth forecast at 0.8% and 1.7% respectively. These were the same level of their growth outlook as of their April World Economic Report. So that wouldn't have materially driven investor sentiment. Rather, I would say that even the IMF forecasting such modest growth for the economy is a sign of worry. They attribute the subdued outlook, to the segmentation in the foreign exchange markets, as well as what's termed as fragility of Nigeria's banking sector. So,
and policy implementation.
Correct. So what we can see from that is that despite the strong performance of Nigeria's core macroeconomic drivers, that's oil prices and oil production, there is still need for policy reforms by both fiscal authorities and monetary authorities to ensure that we take growth to a very high and sustainable level. Nigeria is a developing country. Population grows at over 3%. So you should expect, economic growth to be above 3% as well, for us to have positive growth in per capita income, which signifies welfare improvements in people and the economy. So I guess what policymakers should take out of that meeting, both fiscal and monetary authorities, is that we need to see much more harmonization in our foreign exchange markets, the differential between the official rates and the de facto official rates, the interbank rates rather, we need to see more closure in that gap. We need to see harmonization of all policy, of all exchange rates. From the fiscal side as well, due to the strong, rather, should I say, increased borrowing by the federal government in domestic markets, we have seen crowding out of the private sector. So we need to see the federal government also looking at strategies to reduce their domestic debt burden so that they can allow the private sector to prosper and take on more leverage. We also need to do structural reforms as well, around issues like condition of doing business, around issues like infrastructure. So all these things need to be done: fiscal policy, monetary policy, and structural reforms.
Well, that seems to be what everybody is talking about. Anyway, let's look at Flamel. That company wants to put up right issues. Now, what do you make of this plan?
So far this year, we have seen a number of rights issues that companies are engaging in due to the improvements in capital market condition and the return of foreign portfolio investors. Most companies are now taking advantage of that better sentiment for the Nigerian market to access more capital, either via debt or via equity. However, for companies set on the Nigerian bourse, we have seen more equity offerings, perhaps because of the high rates we are seeing in the fixed income markets. So more companies are delaying their debt capital issuance, perhaps to the later part of the year, where it should moderate. So Flamel, it's a consumer, it's obviously in the FMCG sector rather, and they have very low margins. And for us, we think that the FMCG sector has lots of prospects because of the demographic advantage of Nigeria, and with the plans to now raise more capital to finance their projects, we assume the fund will be going into expanding some of their businesses to capture the growth potential of the economy.
Right. Now, how do you think that proposed right issue will drive that stock this week?
At the moment, we haven't really seen complete details of, number one, what the right issue price would be. So what we would expect is that investors will be a bit skeptical when taking position in the stock while waiting for the right issue, because more often than not, the right issue price is usually at a discount to market price. So investors want to know what will be the right issue price before they start, taking position in the stock.